Hello, everyone. Welcome to today's webinar. My name is Khalil Doheny, and I'm Director of Content at Digital Niche Agency. Today, we have the team of EmotionTrac team. How are you guys doing today?
Good.
Awesome, awesome. And David, Peter, well, we have the attendees trickling in. Do you want to just kind of just give a quick background of your guys' selves? And then from there, I'll explain what we can expect from the webinar today.
Okay. Well, let me start out with me. I'm a veteran of Wall Street. I worked on Wall Street back in the 1980s. Started out with Lehman Brothers and worked with a company called D.H. Blair and Company at 44 Wall Street as an investment banker. For more than a decade, I became very involved with the companies that we were specializing in taking small companies public, and I became really enamored with the idea of being more involved with the companies themselves, and exited Wall Street and went to work consulting these small companies on how to better structure themselves for better financing, better progress, and have been a collaborative consultant in that regard throughout the last 30 years with small cap companies, helping them with their capital formation. So I've worked with companies that have been written up, front page article write-ups in Equities Magazine. I've been on the cover of Equities Magazine, and a number of companies. I originally came into EmotionTrac as an investor 6 years ago, and as an investor in the company, because I saw what was developing, they realized they needed management realized they needed my skill set inside the company, and I was invited in to become an officer, the CFO of the company. Now I'm president and CFO of the company, leading a lot of initiatives from the strategic as well as the financial side. And my friend Peter Schultz here is our to date largest investor in the company. He's been a loyal investor, investing in multiple rounds as they've come up, and has introduced us to many investors that are also very excited about this project. I will say this about Peter. Go from the get-go. Peter is in the financial publishing business, and he's going to tell you a little bit about that. But I watched Peter back in, back in a Puerto Rican conference. I watched Peter get involved in a company called Quantum Computing, and he started recommending it at $1 a share. And then within 18 months, I saw it go to $25 a share, and that's when he went out with his sell sign. Okay, I watched that happen. I didn't participate. The next one that came around that Peter recommended, that was, I felt very comfortable with, and he had been following all of the fundamentals of the company and the market, was a company called ABML, which is now, I believe, American Battery Technologies. He came to us and said, listen, you need to buy this thing. It's 2 cents a share. It's got a lot going on. I'm not sure exactly where it's going, but it's going fast. And I had a chance to look at the company. And within 18 months, that stock had run to $4.50 a share from 2 cents a share. So I was able to participate in that one. When Peter recommended it, I just backed the truck up and loaded up the stock. Unfortunately, I sold more than half of my position at 85 cents a share, thinking it had made its full run. But Peter was able to take people all the way, some of them all the way up to the 450 mark. So anyway, Peter, with that, thanks for being an investor with us, and glad to have you on board in this meeting, and giving folks a third-party perspective of what we're doing here. Maybe you can tell them a little bit about yourself.
Sure. I've had a financial publishing company since 1999, and we primarily focused on option strategies. And then David actually introduced me to the world of microcaps back in 2016. And I'm such a brilliant investor that, like the first 3 or 4 of them didn't work out so well. So you start hopefully getting a little bit smarter if you're going to stay in it. And we started having some pretty good successes, like David was referring to. And I came up with some filters to try and filter out the ones that weren't going to do so good and try and focus on the companies that were going to do well. And EmotionTrac is really an attractive and compelling proposition. It meets a lot of my filters, and that's really good management, scalable software solution, very capital efficient. It hits a lot of the boxes. So it's been great to have some successes. You don't need too many. The two that David's referring to, I think the bottom, he says 2 cents. I think the bottom was around 3, but maybe David got in between the two. Sometimes you can get fractions, but 3 cents to 450 is 150 times on your money, not 150%, but 150 times. So, figure out what a $10,000 investment turns into. So I think I've been involved in EmotionTrac now since, I think it was one of my very first in 2017. So I've been with the company. When they've needed money, I've been happy to put more in. I'm very confident about my investment. And I think EmotionTrac's going to turn into one of our really successful multi-baggers. But the company's private right now. Up until this point, it's only been available to accredited investors, which is the group that my group that we got involved in. But I think they've got something going on right now, and David can talk more about it. But I think just regular investors are going to be able to get involved, which is really exciting for this early stage of a company.
Yeah. And David, Peter, thank you so much for taking some time out of your busy schedules to talk to everyone here today. And I kind of just want to lay out the land for everyone in attendance. This webinar is for you. It's to learn more about EmotionTrac, get your questions answered, and learn about their investment opportunity now on Netcapital. David has a presentation that he's going to go through, and then we're going to have some room at the end for some Q&A. So David, I'm going to hand it back to you if you want to go ahead and share your screen, and we can go through the presentation.
Okay, great. Let me get at it here. I'm on the right screen here. Can you see my screen, Khalil?
Yep. That's it.
Okay. You see the EmotionTrac presentation?
I do.
Okay, great. I'm going to move to there. Okay. We have a company. The EmotionTrac basically has a patented AI technology that enables us to enables us to track what just happened? Screen sharing stopped. Hold on. Oh, it just dropped. You got to give me a second. I got to reopen PowerPoint here.
Okay, no worries.
Give me one quick second here.
Peter, while David is doing that, you want to talk a little bit about EmotionTrac and really what, kind of drew you into them?
Yeah, I think to be honest with you, I mean, I really like the concept from the beginning, and that is gauging people's emotions to the things that they're watching. Video is becoming a bigger and bigger part of marketing. People like watching videos. I kind of grew up with marketing with writing copy, and I'm not quite sure if anybody reads anymore. So especially the younger generation just loves watching video. And EmotionTrac has this amazing technology where they gauge the emotional reaction of people to what they're watching. Now, I thought it was a fantastic idea back in 2017, but I think it's more relevant now than it ever has been. And the truth of the matter is we all make buying decisions based on our emotions. And we try it, especially as guys, we try and justify it logically. Oh, it gets really good gas mileage. The truth of the matter is you like the color of the thing and you're just attracted to it and you think the girls are going to be looking at you when you drive by or whatever emotional thing you have going on. We all make emotional buying decisions. So if you had a technology, an AI technology, that could tell you when people were going to probably like a product and therefore buy it, and when maybe they hated it or really got turned off by it. My goodness, that's like for business and commerce, it's like the holy grail. And here's the cool thing. Aristotle Onassis, one of the richest men in the world back in the day, shipping tycoon out of Greece, he made an interesting statement. He said, the key to business is knowing something nobody else knows. Well, I've kind of made a career out of picking fantastic companies where nobody knows about them. And I would say EmotionTrac is definitely in that category. Nobody knows about the company yet, but I think they will.
Okay, can you guys see my screen now?
Yes.
Okay.
Back.
Okay, so bottom line is we have technology. It enables us to track over 8 major emotions and 12 minor emotions second by second while people are watching video content on their mobile device of any kind or on their computer screen. All right, and what we do is we are tracking 50-year-old emotional standards, and we're tracking up to 6,800 facial standards per second with a total processing of 2 million data points. We have access to over 300 million panelists across more than 130 countries, with 30 million US panelists. What this is going to be very important later on when in the conversation. These are panelists that we get their consent to be tracked. So we're safe AI. We bundle this in 100 panelist tests that we can provide results in less than an hour across. We can provide results across 7 to 8 major benchmark reports and 8 frame by frame playback reports on terms of emotional maps. We also provide, at the end of each of the viewings, there are survey questions, and we provided an in-depth analysis of the survey questions. So it's a twofold technology. It's very easy to utilize. It's very easy to utilize. Anybody on this call could go out and launch one of these tests. You simply upload first of all, you create an account, which is very simple information. You create an account. Once you have the account, you upload your video, you select the demographics that you want to use for your audience, for your 100-person plus test. You add survey questions that are in addition to any of the 4 standard survey questions, and then you check out with your credit card, or you check out with credits that have been pre-purchased from an enterprise point of view. The packages start as low as $600 for a 100-person basic test on less than a minute. These costs, if you think of the cost compared to traditional focus group, is just so far below what it makes it almost prohibitive not to run the test. Okay, here's the strategic opportunity. Bank of America came out with research last year, and they identified the 14 moonshot technologies that were going to go to $6 trillion in value by 2030. All right, of those, on number 3 was emotional AI. That's about $480 billion per technology, which is further confirmed by North America Emotion Detection Recognition. Further confirmed that by Grandview Research that just in North America alone by 2030, it will be a $132 billion market. All right, EmotionTrac has actually developed a service and has offerings, has tested the service, is either selling or has actually sold it into more than 7 different verticals, industrial applications that amount to over $1 trillion in value. Okay, those are industries that are over $1 trillion in value. We haven't gotten to $1 trillion in value yet, so don't let me misguide you there. Okay, EmotionTrac isn't just a concept. It's not simply a concept that at the time will eventually come. We have actually achieved traction. We have had continually accelerating sales. All right, last year we just rounded out our last year. We had a 30% increase over the previous year. We've had a 70% increase in bookings over last year. And we've had December was our record month. We're very close to break even. And we believe that because of the events that are evolving right now, which we can talk about on this presentation, we believe that we're going to have a banner year we're going to have a year where the fundamentals are going to start to go parabolic. And we expect the value of the company to track with that. We have business opportunities. This last year, we decided to focus not just on the transactional opportunities, but to also build enterprise opportunities. And we've got a pipeline now approaching $4 million of business opportunities that we could land this year and are in play and under discussion. So we really could have a parabolic year this year, which would signal the beginning of a unicorn opportunity. We have, world-class customers. We have over 100+ customers, ranging from, very large marketing firms to some of the biggest law firms in the United States. And our customer values are going up, and our sales are increasing. To date, our largest order to date was $75,000. That may be changing here very soon. We've got testimonials from the creative media world, outstanding testimonials, and we also have testimonials from the legal world that indicate our customers are actually getting a significant benefit from our product. We've been recognized by 2 national organizations. We won a READ Award, which is the National Political and Campaign Industry Award for Best Creative and New Technologies. And we also won, we took the number 5 place for new technologies introduced to the legal industry in 2022, and that was at the ABA the American Bar Association Technology Conference. So we've got something very real here. We've got 3 patents that are broad reaching, that protect us on the intellectual side, and we have a team that has built or been part of acquisitions and exits of over $20 billion. So you can find more information on that on the Netcapital offering later. Now, the financial model, we do extensive financial modeling. That's part of what I bring to the table from my financial background is, you have to have a roadmap. You have to work with an architectural plan with the intention of building a company and the scope of the company that you want to build, and look at what are all of the components that are going to need to go into that company, and look 5 years out and see what do we have. And while it doesn't, the model doesn't necessarily guarantee the exact success you're looking for, it gives you an architectural plan to shoot for and to share with and to collaborate around. Our plan shows us that it's a fast scaling digital business. We by intention went into this business. All right, we by intention went into this business to be a digital disruptor and look for markets. We've been through 3 pivots in our products, and we've found and hit on a product that we believe ticks all the boxes. And this product has gross profit margins ranging from 80% on up. So it has unicorn metrics for it. And once you look at the markets we're going after, that we can reach a unicorn status. We can reach a unicorn status with penetrating much less than 1/100% of our markets. Okay, so we can talk more about that in the question and answer period. So anyway, so I'm going to leave. I'm going to stop sharing now. And do you want to open it up to questions, Khalil?
Yeah.
Now, just by the way, the reason why we're here, and I want to make this clear, is because we have an offering open with Netcapital. We've actually had 2 successful crowdfunding offerings. We've had a great experience with crowdfunding. We've raised over $1.25 million through crowdfunding. And one of the reasons why we have this crowdfunding going is because we've had, over the course of our different tranches of capital, we have had a number of our crowdfunding shareholders have asked if they can buy more shares. So we could not do that through an accredited offering. So we've offered this to our own shareholders as well, and they are participating. So anyway, I encourage you to take a look at that crowdfunding, and we can answer more questions around it if necessary.
Yep,
All right,
and I added that link in the chat box. So if anyone wanted to check out the raise page, the link is right there. And yeah, we'll open the floor for some questions. So if you have a question, there's a Q&A chat box. Please leave it there. First question I see here is, hey, David, could you talk a little bit about one, the Microsoft partnership, two, your growth strategy, and three, your exit strategy?
Okay, so like I said, this last year we decided we were over the last 3 years we've been able to generate and continue to accelerate our sales on an individual basis. In COVID, we launched the product in 2019, and as you know, in 2020, everything shut down in the advertising world. So we originally were targeting the advertising world, and we were able to. The one of the worlds that stayed alive was the legal world in a very flimsy and remote way, but there was a need for our services in the legal world as a mock jury insights tool. And so we started selling to the legal world, and by 2022 we became top 5 with the American Bar Association. But what we had been doing is selling individual law firm by law firm, attorney by attorney, and really engaging them. And it really was a proof of concept with all of them, and they were having significant success. We have a customer, a particular customer that has been with us for 2 years, one of the largest law firms in the United States. They've had a number of their partners have been actually utilizing our service with great success. And that law firm, I don't want to name them because we are right now in process. They have tapped us and said, we want this to be utilized on every one of our cases eventually in the firm. So we are out right now designing the stages in which this is going to go to usage within that law firm. This firm does $1.7 billion in fees every year. And we've calculated their full usage of our system will equal more than 20 million in revenue once they're up to full speed. So we're staging that in right now. And part of the reason why we got this going is because this last year we decided that it's time we start looking at and targeting enterprise firms. And we have a limited sales team, and we decided to focus a significant portion of our energy onto building enterprise relationships, which means getting the whole company to buy our service. And so one of the things that came out of it was this law firm that now wants to utilize us across all of their cases. And by the way, they parse out 100,000 cases a year to other law firms, 2,000 other law firms. So it's a big opening for us. This one opportunity alone could put us into a unicorn category, because in the legal tech space, trading at 30 to 50 times revenue is a commonplace. So this is a very big deal. Now, on to the question about Microsoft. Interesting enough, in the last 6 to 8 months, we struck into a very high level relationship with Microsoft. We're going through all the processes. It's a very big organization. We've got a key person within Microsoft that's guiding us through, championing us through multiple verticals within the organization. We're currently through the C-suite. We're actually being tested for their branding. And they've seen a lot of technology out there, and we're having a really healthy discussion about moving this relationship forward. Even as recent as yesterday was the last meeting we had with them at a very high level. We have cleared and are now a partner with Microsoft in marketing through the Azure system, and we're being invited into some very special discussions and very special meetings at a very high level at the AI level. So, I have to be careful about how much I say. I don't want to clobber the relationship with them, but it's very encouraging. And I'm telling you, there are things happening with AI where we're going to be a very valuable component. And one of the things I did learn from Microsoft is that there is, and they pointed it out for us, and we're rapidly pursuing it, is this whole business of hallucinations, which many people may not be aware of. Hallucinations are when the AI takes on a mind of its own and creates something with very convinced that's right, and it takes on something and builds an outcome that is absolutely incorrect. It's an error, it's a flaw. And one of the things I'm hearing from Microsoft is that AI, they don't believe anytime in the near future that AI is going to be able to eliminate the human element. And this is really profound stuff that we've been able to engage with them. And we believe, based upon discussions with them and with our own research, that we have an opportunity to become a validator of AI produced content, which opens up a whole, it's a whole nother world. It's this is very conceptual, very dream, but that's part of what's happening with Microsoft. And once we clear, there's certain tests we're going through with them, I think it will open the gateway. They're looking at a test that for their internal use of our services, and we're crafting that test out right now. If that test goes well, if it goes well right out of the gate, then it's going to open us up to a significant number of Microsoft's largest customers. If it doesn't go well, they're willing to look at and collaborate with us on how we can make it better. So it's really, it's put me into, I realize we have a world-class product, and which has been confirmed by other technology opportunities I can talk about. Last 12 months ago, just over 12 months ago, LG came to us and inquired. They sought out 15 companies globally that they wanted to use their emotional tracking technology on a special project, a household robot. And they put all 15 companies into a competition. And the last we heard about 6 months ago is that there were only 2 companies left in the competition, and we were one of them. And we don't know where it is now, whether that project is moving forward. To me, it's not the importance of the relationship or the revenue generated out of being a technology provider to LG. What it tells me is we've got a world-class technology that can compete out there. So that's a very long-winded question. Long-winded answer to that question. I hope maybe we should move on to the next one.
Yeah, and then speaking of competition, we have a question here is asking, who is your competition?
Okay, well, let me do, that's a really good question. I used to put that in my presentation, and I think I've just got a little quick piece to show you on my presentation that will help explain that. Okay, so we have this technology, and the biggest problem that this technology presents for the biggest players is that the users demand consent. Okay, this is a big problem because the ACLU and 27 human rights organizations are marching around looking for anybody that's collecting bioinformation, and they're attacking them. They had a landmark case with Clearview AI that set this in stone, and they're going after anybody, whether it be Zoom or anybody else that's collecting bioinformation without permission. And all of these companies have found themselves having to deal with the controversy of this, because the controversy extends beyond just simply getting consent. In my conversations with Microsoft, they've announced that they're phasing out this aspect of internally within the company because exactly this reason, that it's a very spooky subject to present to your existing subscriber base or user base, and it's very delicate when you start talking about tracking somebody's emotions. Any conversation I've had with people about what we do, the first thing they go to is, "Ooh, that sounds scary." So it's a really spooky thing for very large companies to get involved with legacy user bases. So the thing we do, remember, we have access to 300 million panelists globally. We can get them with their permission and their demographics to allow us to track them. So it's very important. So there's a barrier to entry for very large companies that want to get in this space, and the smaller companies in the space. A lot of those companies, whether they've been funded, some of these companies been funded on this page, have been funded as high as $40 million to $70 million to pursue this technology. And what they've done, many of these companies with these very large budgets have gone down very scientific paths that have nothing to do with the customers or don't provide the customer experience that we can provide. We can provide a customer experience that you can go in and get actionable data right within hours off of our tests that you can set up and utilize. So we really we're on the leading edge of a whole new market, and there's not a lot of competitors, and there's not a lot of people. There's not many competitors that have figured out the model that is working, and certainly not getting close to break even. Okay, these are all have huge budgets and not enough cash flow to cover themselves. You know, Harvard just came out recently came out with in 2020 a report on the camel versus the unicorn, and talked about how important it is as we move into these new markets post-COVID, how important it is we start looking at, can the company not only grow into, you know, an exceptionally large ceiling of a market, but can they also sustain their business long enough to have a footprint? So, you know, we have competitors. They're small. They're trying to figure it out. Nobody has taken on the market and run with it at this point. Certainly in the legal space, there's nobody that you know. Our only competitors are really in the creative space. So let me stop that share. What other questions?
Yep. And then when you make sales, do they generally stay with EmotionTrac for the long term, or renew their subscriptions?
So, you know, part of this thing is we've got the product right. We got it right, and we launched it in 2019. We knew this thing would have an impact on people that used it, and it's proving out to have a great impact, and it'd be very commercially viable. You know, we had one case where the lawyer actually went to use the service the night before going to jury, 2 nights before going to jury selection. He ran 6 tests with his case overview. He wanted to find out 2 things. He wanted to find out, was there any juror members that were you know, not amenable to his case, his arguments, and he also wanted to find out if his $80 million reward was too much, because he would lose credibility. In that study, he learned something that he didn't realize he would have learned. He learned that not only was the $80 million not appropriate, but he could take it as high as $120 million. So he also found out something about an inappropriate demographic in his jury. So he used both of those items, went to trial with this, and he won the case, and he got the award for $120 million. So he is one of the people that's, you know, you can find him on our website. He's referenced there. You know, it's the Paris agency. The Paris law firm, and he's a speaker on the law continuing education circuit, and brings us on stage from time to time. The reason I'm telling you this is we have a product that works. It's now about getting the word out. So, and it's also about the pricing packages. All right, you know, how do we price this? And we started out just pricing it as individual tests, and then we started selling it in bulk. All right, you could pre-buy it because we've got 80% gross margins. You could pre-buy the product, the service, and get it at a discount. And now we're moving into enterprise agreements. So to answer the question, we have had multiple. Like I say, we have a law firm, the largest in the United States. They have 4 or 5 of their partners that have been coming in on a continuous basis using the product, and now have been buying the product in bulk in order to get a discount. And now the firm is looking at their usage of this and saying, we need to start applying this across the firm, because the cost, based upon what the insights it provides these attorneys, is so powerful that they're having profound experiences. The cost is minimal. You know, our typical legal case, they'll run up enough. You know, our pricing model is, you know, it's a base cost for the test, and then for added features, for more audience, for deeper demographics, there's an add-on, there's a upsell price to that. So we're getting attorneys that are spending easily $4,000 or $5,000 on a case study, when our starting price is, you know, for that particular case study isn't anywhere near that. So the answer is yes, we're getting reoccurring. Where we are right now, the reason why we're raising capital right now is not to Of course, we're going to always do technology enhancements. That's always something we're learning, and we already see the path to do those things, and we want to invest money in those areas. But right now, as we're getting interested parties looking at us and kicking the tires, and we're getting accelerated sales, we want to make sure that the valuation of the company as we go forward raising money, we can spike that and leverage sales right now. So the purpose of this offering is so we can add more sales team in order to address the needs that the customers' needs that are in front of us that we're not even able to address at this time.
And do you see a single exit, or is there a possibility of multiple exits within multiple verticals?
Okay, so I come from a background of public companies, and being involved in financing them, investing in them, helping to guide them, and I've always looked towards the North Star for us is to drive towards an eventual public offering and to entertain suitors along the way. Okay, I will tell you, based upon the suitor inquiries we're already receiving, that we will probably get acquired before we get a chance to go public. And I'm saying probably, I'm trying to couch this without any definite terminology. What we're looking for is before we do that, before we take an interested party, and I'm talking about suitor inquiries, not from small companies. I'm talking about suitor inquiries from some of the largest companies on the earth. I can name 2 of the largest companies on the earth that have got an interest in us. Okay, so the bottom line is we're not taking those. That we're going to drive towards what we call a parabolic year. We want a year when we can demonstrate we're coming out, and that usually happens after about $1 million in sales. The next year we would be looking for, hopefully we could do 5 million in sales. That's the kind of curve we want to model for, and we want to build the resources into. Once we can demonstrate that kind of curve, the price of the shares go parabolic. So we believe that M&A is probably going to be, and the question is really, I can't tell you indefinite or absolute in an absolute manner when that year is going to happen, but we think we're starting to see the interest coming in right now on what we're doing. This could be our banner year to go parabolic. I certainly think right now we're at a run rate. We were looking at our numbers yesterday. I was talking with Aaron as we were approaching towards the end of the month. We're at a run rate that's now, we've jumped from 350,000 to 500,000. We're now jumping to a run rate on a monthly basis that looks more like $1 million to $1.5 million. That's already in the first quarter of this year. So I can't tell you, I can't peg it for you what this year is going to look like, but the conversations we're having aren't about individual attorneys using our service or individual creative agencies that want to give us, by the way, we have video testimonials from top agencies about, their use of this service. So it's really about getting the word out. And I think that's going to, it could be in the next 18 months, we hit our parabolic pivot. So, I mean, here's the really exciting thing. There are 93,000 personal injury lawyers in the United States. All right. We are currently talking with one of the largest that represents that sends out over 100,000 cases and represents 2,000 of those attorneys. On this one particular law firm, we can become a unicorn if you use the multiples that are available in the legal tech industry off of one law firm. Think about those other 93,000 personal injury law firms in the United States that could utilize our service to enhance their cases. So I guess I've maybe even over-answered the question.
And this looks like categorizing FPR responses into emotional categories. Where is the AI component? LLM, learning set, what are the patents for?
Well, we have some really great representation on the patent side. We have great creators on the patent side. Our advisor, our patent advisor, Clinton Simmering, was the one that basically wrote the Baidu. Clinton wrote the Baidu algorithm and then helped to create the patent around the Baidu algorithm. He was so young that Robin Lee, gave him some stock, and he used that. He used that stock. Well, I don't want to go into his personal situation, but anyway, the bottom line is, the patents we have crafted are very broad reaching. We're very early on in this marketplace. So I believe we have the patents listed on our offering. So you can go look up those patents and read them. I'm not going to try to interpret them for you, but they're very broad reaching. And we do have people that we believe are violating the patent. It's that and we are in process of starting to work at prosecuting those patents, but we don't want to make that the core. We don't want to turn that into a core argument of our company. So the AI. So the question was about the AI. I'm not the technical guy. I will tell you that there is a crossover between AI and machine learning in this, and I know that we're utilizing some of the largest databases on the earth. So that I do know, and maybe next time we have one of these webinars, we can have Aaron, who is more adept at answering the technical questions than I am.
And then, is a SaaS model of sales an option for the future when the customer base expands?
Yes, this has been in discussion with very high levels with candidates that would utilize this as a SaaS model. The reason why it's not a strict SaaS model at this time is because when we can't offer an all-you-can-use service, because there is a component of cost related to the audience engagement. So we can create a SaaS model. We can create a SaaS model that allows the user to that doesn't include the audience cost, and then allows the user to use the model as much as possible.
And then, how do you reach new customers? What is the average cost per acquisition of a new customer?
It varies. We don't have enough data to give you a really significant sampling of what our customer acquisition costs are. And part of the reason is because we're serving, for example, the legal industry. We will go in, and we're finding that we go to these conferences, especially conferences where some of our customers are speaking, and we go to those conferences and we gather customers that way. And so equating the cost of the conference versus the approach that we may be using on an email basis through LinkedIn or even through Facebook, we don't have enough data to give a relevant answer to the customer acquisition cost. And I really can't answer that at this time. I mean, because we're also in the creative space, which is a whole different customer structure, both enterprise and individual. Anyway, I can't answer that.
And then let's see what we have here. Can you at all share with us a ballpark of when EmotionTrac might be sold? How long might it take?
It's really, all I can tell you is really, I mean, it's inappropriate for me to peg a time and a value. All right. I can tell you that I've been an investor in this company since 2017, and these projects, there's never an overnight wonder. It's really an overnight wonder that took 7-10 years to get there, and it's really about when is it ready to turn parabolic? I'm just saying that this is the year I see it. It's actually turning from working it and pushing it through. We're starting to get the calls. We're getting calls from some of the top creative production people in the industries, audience related. I mean, I don't want to name names, but talk about the leaders of streaming content. we're getting calls from those people at the leadership level about how they can utilize this service. So it's actually, we're starting to have a lot of fun. It's getting, we're getting close to break even. Ultimately, we don't want to hold ourselves down to break even, but that's just, that means we're sustainable under whatever the economic conditions, and then it gets very positive from that point. So the capital formation is looking very exciting this year, in terms of accelerating all of our marketing efforts, and so the capital looks like it's going to be much more promising and easier to get to. Certainly, the customer relationships which are going to be driving that capital formation, are starting to happen. We're literally everybody in the company is selling right now. So the bottom line is, I think the next 18 months could be our parabolic, our moment of going parabolic, and then all of a sudden everything starts accelerating, much faster. And what does that mean? That means that we decide, once we become a darling of mergers and acquisitions, then all of a sudden we can make a choice as to optimal timing. The bottom line is, in this offering, you shouldn't be making a purchase in this offering or buying stock based upon what the company is going to deliver to you in the terms of liquidity in the short term. This is a long term. You have to have a long term perspective on it.
And then, is there a plan to be more active on social media this year?
Oh, absolutely. Absolutely. It's really, we have so much, and also we have a whole press strategy that we want to start working on. It just takes capital. That's all. And, we've been very frugal as a company to not, be very efficient about, we've only raised to date less than $7 million, close to $6.5 million in this company, and have been through 2 pivots in terms of product type. So, we've been very careful not to spend money until we see opportunity that's going to generate revenue in the near term. And that includes, promotion, it includes press, but that will soon start changing. Anyway.
And Peter, I want to give you an opportunity to mention anything. I know
exactly. I was thinking the same thing.
So yeah, Peter, is there anything you would like to add?
I would. So David keeps making reference to unicorn, and these are wonderful animals, that little girls like to put on their walls. But some people don't know what a unicorn is. And so a unicorn, in the classic definition, is a private company with $1 billion valuation. So I think it's really important to put in perspective. I asked David about the shares outstanding and the current price of this round. And I believe the stock price is $2.50. Is that correct, David?
That's correct, yeah.
Okay, so at $2.50, with the amount of shares outstanding, according to David, is a $41 million valuation. So to go to $1 billion is over 20 times on your money. And $1 billion is not much of a valuation nowadays. And usually that can be achieved by a larger company just seeing an acceleration of revenue. The revenue numbers don't even have to be that high, but if the revenue in the next 12 to 18 months starts to do this kind of exponential rise, that's when companies really start paying attention. And I want to mention one more thing that very few people know about. Our group does at Wealth Builder Publishing, but if you don't know about this, it's really significant. So several years ago, I think it was around maybe even as early as 2005, Congress decided that small companies, small private companies, needed to have some kind of a boost. They had to have some kind of a incentive for people to get involved. And this is one of those circumstances where Congress was really working in our favor for investors. So they came out with something called Section, and you can write this down. You'll want to Google it. You want to read about it. It's called Section 1202. Section 1202. And what that states is if you invest directly into a company, so that's not buying shares on the stock market, but if you invest where the company themselves is getting the money. And that would be, I believe, applicable with this round that's happening right now. And the company is worth less than $50 million, which according to David, that's the case right now. And you hold that stock for 5 years or longer, then you can get up to $10 million of capital appreciation or profit on that stock and not pay one single penny in federal income tax or state income tax. So that's this really huge incentive. And this isn't, designed to, make fat cats rich or anything. This is designed to have companies like David's, these small companies that are adding this huge value to the economy, to have them have a chance to get off the ground and get a little bit of capital in. And it's an incentive for mom and pop investors all the way up to big venture capitalists to invest in a company with less than a $50 million valuation. I think that's really significant. And 5 years kind of goes by in the wink of an eye. If you've been around on the planet for a while, you realize that. Sometimes that's the amount of time it takes for these companies to really get off the ground. But
And
really
Peter,
top valuation right now and really great potential.
I believe that also survives through an acquisition, doesn't it? I mean,
I don't know. I'm not an accountant, but
Right.
I just wanted people to be aware of it. A lot of people don't even realize that this clause exists, and it's really significant. $10 million tax free is, if you figure out the tax on 10 million, that's a pretty big ad right there.
all right, Khalil.
I was on mute there. I know we are coming down on time here, so I just wanted to just ask you both, David and Peter, someone who's looking at EmotionTrac, they're on the raise page and they're on the fence about investing. What would you say are those top 3 to 5 reasons you should invest into EmotionTrac?
David, you want to go first?
Well, you go first, Peter. I've been going first all this whole.
Yeah. Okay. So here's the thing. When you look at your investment portfolio, I used to kind of laugh at that word because I thought I don't have a portfolio. I just, I have a few stocks. But if you look at your portfolio and kind of your general plan, I think, people say, put the majority of your money in these really conservative things and all of that. And I think that's really good advice. I would never advise against that. But I think you need to have some money that has the potential of lottery size profits. Not all your money, don't bet the farm, but get a few of these little companies. Like I say, we started off with option strategies. And the reason people trade options is because of this huge leverage and that huge payback potential. Options just have one problem, and that's they expire. So you can buy these little companies, and as long as management hangs in there and keeps on pushing, I build these things as options that never expire. So you have this huge upside potential, but you don't have that timing issue. If it takes 2 years instead of 1 year, hey, that's still okay, because the returns that you can get on these little companies are kind of mind-boggling. You can't get them anywhere else in the market. There was only one space where you could kind of get them for a short amount of time, and that was in cryptocurrency. And that went straight up and it went straight back down, and most of those cryptos don't even trade anymore. So I love having a good company with a really good business model where you can kind of track them. This is a little bit different. The company is private. It's not public. So if you get tired of owning it, you can't just click your mouse and have it all go away. If you get into a private company, you're making an investment until either A, the company gets bought out, or B, they go public. But if you're willing to do that, some of the biggest upside in the market is in these little private companies that nobody knows about, but that have incredible technology.
Great, Peter. So, here's my thoughts. I've been around these small companies most of my life. My family, I grew up in an entrepreneurial family, and I saw my family. We had a jet refueling business that disrupted the corporate jet business in the 1960s, and I grew up in that market. So I'm a big believer in companies with huge upsides coming out of small places. And with since the .com era, We've seen that. We've seen companies like Uber. I know John Fanning, former the founder of Napster, and one of the things he was invited into Uber to invest in Uber at its very early stages, and a simple $25,000 investment in Uber, which was at the level they were inviting people in, a handful of people, when it went public was worth $125 million. So, part of the fun of this is dreaming big, but you know what? Don't overdo it. Go out there. In order to participate in deals like this, you got to be in them. You can't just be on the sidelines. And what do you want to look for? I mean, I've been spending my life screening and looking for companies to be involved in. We got a company that has an incredibly high ceiling, multi-hundred-billion-dollar markets opportunity. Okay. We have a technology that's being welcomed in, and we have a company that it's not just concept, it's actually selling. And it's really, we're on the forefront of some very big things. And I think that the best and biggest things to come, we haven't even discovered yet in this company. So, here's a shot, for whatever it's worth, to look at in your portfolio what fits: $500, $1,000, $10,000. It depends on what's appropriate for you. You get to make that decision. But you got to be, I always tell people, you got to be in them to win them. And, if you're not in it, you're not going to win it. So, classic venture capital models are, out of 10 companies, you're going to get 2 that run really well. And that you're going to get 3 to 5 that, may lackluster perform, may just sustain. And then you may even get more than that are losses. So, I would say, I think this is one worth participating in and see where it goes, because it could overshadow your whole portfolio.
Awesome. And David, other than investing, what can people do to spread the word of EmotionTrac?
Well, if you are any kind of creative world, if you work for a production company, a film production company, a television production company, if you are a creator yourself and you need to test your content to see anything you're doing that requires an audience or a jury or a body of people, and you don't want to present your content to that body of people, whether it be AI content or generated content by yourself, if you want to present that to an audience of people, then this is a service that is going to provide tremendous insights and cost savings, and will prevent significant risks for users of that. So that's one of the things. One of our investors is the former head of advertising buying for Procter & Gamble. Okay. He's been retired, but he said, this is going to change the way advertising's bought. It's going to, the advertising space is bought. So, there are people in this audience right now that do this sort of work, and, reach out to us and see if we can help you with what you're working on.
Awesome. Well, thank you again, David and Peter, for taking time out of your day to talk to us here. And for everyone who, had to hop off the webinar, don't worry. This whole webinar has been recorded. We're going to be posting the replay on the Netcapital page, and highly recommend to check out the Netcapital page. If you're interested in what EmotionTrac is doing and you believe in it, check it out and hopefully make an investment. But yeah, that's going to conclude our webinar here today. David, Peter, everyone who attended, thank you, everyone. Have a good one.
Thank you.